Hi, this is Vadim with EminiForecaster.com. I just wanted to share with you some trading tips and tricks. So let's see. Firstly, I want to talk to you about what I call trader's identity. I want you to find out exactly which markets you are going to trade, whether it's going to be stocks, bonds, futures, options. You want to establish which markets you're going to trade and learn everything you can about your market. Secondly, what is your lot size? Are you going to trade 100 shares, 1,000 shares, one contract, two contracts? You want to know exactly how many contracts or shares you're going to trade. Are you a swing trader or a day trader? Are you going to take 5, 10 trades in a day? If you have time, you sit in front of your computer, you don't have a job, or you trade for a living. Or are you going to swing trade? You're going to take a couple of trades a week and let it ride. Or are you going to do both? So you want to decide what you're going to do there. Are you a systems trader or a discretionary trader? Do you follow exact signals, so buy and sell signals, whether you have a system you designed yourself or someone else's signals that you trade? Or are you a discretionary trader? You analyze the market and you see, you analyze the news and you make your trading decisions that way. Or are you both? Are you looking at signals that your system generate, and then you use your intellect and your analysis to decide whether you're going to take that trade or not? What are your numbers? You want to always be aware of your numbers. Winning percentages, your profit and loss ratios, your average trade, average losing trade, average winning trade, how many trades you take in a month, what's the average trade's length, how many days, how many hours you're going to hold a trade. You want to be aware of your numbers, and I'll tell you exactly why. Here are the tools that you want to have. Of course, you want to have fast and cheap broker. Get rid of the phone brokers. Get yourself a fast online broker. Good brokers that trade any markets, bonds, futures, stocks, options, because if later on you decide to trade another market, you want to be able to switch easily. You want to have some form of a system, and I'll tell you the reasons why. Even discretionary traders, they follow some kind of a system, they have a routine of picking stocks or picking trades, You should follow several people or several services out there, signal services, and see what works for you. You want to have a journal, and you want to record your trades in there, print out your charts with your trades on them. You want to have your equity curve in there, jot down your thoughts, your mistakes, your rules, etc. You want to have some kind of a binder, some kind of a journal, which you always want to have, keep it on your desk. Write in it as much as you can. This actually develops discipline, and you can also learn from the past. I personally use TradeStation, so they're brokers, and they are great charting software. And you can develop strategies in there and test your ideas in TradeStation. It's pretty easy to learn, so check them out. I want to talk to you about thinking in trading. I heard one trader say, forgot who it was, he basically said that if he didn't have a brain, he would be a great trader. And it's partially true, and he was referring to the emotional aspect of trading. I have found out that systems reduce the amount of emotion and thinking and stress in trading, because it becomes robotic and systematic. You don't care, and that's the mental state you want to be of, not caring what's going to happen. You cannot know exactly 100% certainty what's going to happen in the market. So that uncertainty sometimes gives people stress, especially successful people like you. Because you want to know exactly what's going to happen. Like in business, you can plan out your business plan and know what your numbers are going to be. But in trading, too much uncertainty gives people stress. Plus, if they're a discretionary trader, sometimes they don't know what their numbers even are, so they cannot project anything. So systems tend to reduce the amount of thinking. And don't try to be unemotional like a robot either. Money is the most emotional thing out there, especially when you lose it. And instead, find ways to reduce your emotional involvement with the markets. Do what you must. Whether it's talking to other traders, picking up other hobbies, using more system trades to reduce thinking in the market. The hardest and usually the most profitable thing to do is do the opposite of what you feel. I learned this from Rob. He always says this. Do the opposite of what you feel. And it works like magic, actually, if you can do it. But I'm still mastering that. But it does pay off pretty well, I must tell you. It's the hardest thing to do, though. Here's the question you want to ask yourself. Can you afford to lose your entire account? I mean, trading account. If not, maybe you should scale down on your lot size or not trade at all, because people who, max out their, pull out cash out of their credit cards or use their trading account to live off of, they have too much stress. They lose hair, they lose sleep at night. Not a good way to be a profitable trader. OPM, probably heard of this term before, other people's money. And in trading, it refers to adding contracts or shares when you make a certain amount of money, like overnight margin. So if you trade one contract now, and let's say in Emini Futures, like S&P500, overnight margin is about $4,500. So let's say you're trading and you just made $4 or $5 grand. You can trade out. You can add another contract. Okay, so that's other people's money concept in trading. So you want to decide on the amount of money you're gonna make and add shares or contracts appropriately. After making a margin profit, waiting for a pullback in your equity before trading more contracts is a good idea, because usually if you just made $4,000 or $5,000, you're probably at your near-term equity high. So sometimes it's not a good idea to add contracts at the height of your equity curve. So waiting for a little pullback, like if you get stopped out a couple of times and then jump in with additional contracts, is probably a better idea. You want to adjust your strategy and risk appropriately. So the more contracts you trade, the more risk you have. Adjust your strategy appropriately. Don't take on more contracts than you can handle. Reducing the risk, especially in volatile markets like right now, is the best thing you can do. Stay in the game.